Hi, I'm Daniela Cambone, and welcome back to StansberryInvestor.com. Today, we're talking various market risks and the probability of a near-term market correction. The S&P 500 index bottomed on March 23rd, 2020, and has essentially doubled since. In fact, based upon index closing levels, we have to go back to at least October to find the most recent 5% correction. Now, this is statistically unusual. Going back to 1928, each calendar year has generated 3 to 4 such corrections. Joining me today to talk about this is Scott Wren. He is the senior global equity strategist over at Wells Fargo Investment Institute. Scott, welcome to StansberryInvestor.com. Good to be with you.
Thanks, Danielle. How are you today?
Doing well, doing well. I hope your summer is going well as well. I want to get your thoughts on the markets here. The question from many investors is, is a near-term correction coming sooner than we think here?
I mean, really, if you look at it as well, a 10% correction historically happens about every 10 and a half or 11 months. So it's been a long, long time since we've had a 10% correction. And I think for us, we thought a potential trigger were inflation fears, but I think the market has it right that inflation, while it's high now and it's probably going to be a high for at least a few months longer, it's in the process of topping out, and probably a couple of years down the road, it's not going to be that much of a problem. So that's aligns with what we think. Another trigger we thought might possibly occur would be something with the Delta variant or just further virus news. And that's put a little bit of a dent in the market a time or two or over a session or two. But for us, it looks like this market still has more upside. I mean, when we look out to year-end 2022, we're looking for 4,900. That might even be slightly conservative, but I think it's going to be hard to time when a pullback might occur. I feel pretty confident that it will. And what we've been trying to talk to clients about is just being prepared for that. In other words, knowing where you have holes in your portfolio, knowing what you want to buy. So when those eventually do occur, you're going to be able to step in and make the transaction rather than, we get the pullback and then you're trying to figure out what you want to do.
So that said, Scott, what sectors are looking hot to you right now?
Well, I think for us, a few months ago, we backed off of technology. We're still even weight there because we're not going to make it to that year-end 2022 target when, technology, it's got to participate. It's 26% of the total market cap of the S&P 500. So it has to participate. We think it will. But what we've been leaning into in terms of sectors over the last 6 to 9 months have been things like energy, industrials, materials, financials. Now, those have lagged over the last 2 or 3 months. We had a big rush of value, and those sectors performed well, and small caps performed well. But over the last 2 or 3 months, those segments of the market have stumbled, but we don't think their day in the sun is over. So we want to try to take advantage of some of this relative underperformance. That's certainly been the case, but we want to continue to lean into this recovery, not only in the one we're having here in the US, but abroad as well.
So you mentioned the various risk factors, Scott. What about the commodities sector? Do you see them looking to perform stronger here amidst the turmoil?
Well, as far as the commodities go, we do expect the dollar's rallied a little bit here lately. We expect that strength to fade as we move into 2022. So we do expect a little bit weaker dollar. That typically helps commodities. But I think global growth, the supply and demand is going to be there. And whether it's raw materials like copper, whether it's agricultural products, things like that, we think that commodities are a good spot to be. We're overweight commodities, and certainly for our clients who tend to, they like concentrated positions. They don't tend to take separate agricultural positions or industrial metals type of positions. They tend to aggregate it, and what we're trying to do is just get exposure, overall nice broad exposure, and to be overweight that in portfolios.
I want to get your thoughts on Jackson Hole. Now we're speaking ahead of the Great Big Symposium, which takes place next week. What can we expect? What will Powell do here, Scott?
Powell's going to hold the line. He's going to say that things are not in place to really start the tapering process or to set a particular date. Although I think we're probably at the end of that kind of commentary. For us, we wouldn't be surprised if Jackson Hole didn't yield anything certain about tapering, but certainly maybe at the September meeting, we're expecting something. I think the bottom line from us is that we're expecting some tapering to begin either late this year or early in 2022. I think with the kind of growth we're expecting, which, 6.5–7% growth this year, still probably 5% or north of that next year, it's hard to not start tapering here by any stretch of the imagination. I think the market's very well prepared for it. The tapering process is probably going to take 12 months, so we're still far away from when rates will actually go up. So I think at Jackson Hole, we're not going to get a whole lot of new news.
But aren't they really backed up into a corner here? Because if you suggest the economy will grow at that pace, if they cut rates, how do you justify it? And if they don't cut rates and the markets tank, how do you justify that? So are they backed into a corner here?
Well, I think the Federal Reserve, probably if you took an internal survey of half the governors, they would have already started tapering already. But that obviously hasn't been the case. So I think the Fed's in a spot where they know they have to act. The market knows they have to act, and that when this does start, their backs maybe to a wall to a certain extent, but I think that we'll see inflation decelerate. I don't think that they feel like they have to do something right now, but certainly over the course of the next 6 months, 9 months, if they don't start tapering, I would be very surprised by that.
Scott Wren over at Wells Fargo, thank you so much for joining us here on StansberryInvestor.com. Thank you.
All right, thank you.
And thank you for watching. We'll have much more for you, so be sure to stay tuned.